Good morning. Welcome to First Mover, your first global look at today's action in the Bitcoin, blockchain, and digital asset space. I'm your host, Christine Lee. Joining me are my co-hosts, CoinDesk Managing Editor of Global Capital Markets, Lawrence Lewitinn, as well as Managing Director of International Content, Emily Parker. Good morning, Emily, as well as Lawrence.
Good morning.
Good morning. We're getting a bit of a bounce in Bitcoin.
Yeah.
Let's take a look. Checking in on a live look at Bitcoin, the CoinDesk Bitcoin price XPX index is at 31,500 and change. Bitcoin is up about 6% over the past 24 hours, and the CoinDesk Ether price ETX index is at 1904, climbing over 8% over the day. And the new DFX, CoinDesk's DeFi index, is trading at 427. DeFi is skyrocketing over 10% over the past 24 hours. The most reliable reference prices for institutions since 2014 are now published under the CoinDesk brand, trusted globally as the leader in crypto news events and data. So, Lawrence, what's going on with the markets? Are we getting a good rebound? Do you see this continuing?
No. I mean, look, that's the short answer, is continuing over how long? I mean, if we're talking about a couple of days, sure, that could happen. Long term, several weeks, I wouldn't bank on it. We're still in this long-term downtrend that's been in place since May. It's been 2 months now. If you were to start from the point of which China made it harder for crypto firms to do business with financial institutions, it's 2 months ago yesterday. So no, we're going to get a bounce here and there. You're going to get a nice little jump with the B word conference
That's right. That's right. We're going to hear from Elon Musk as well as Jack Dorsey and Cathie Wood on the B word that could bode well for understanding the narrative around Bitcoin in the media.
Yeah, it could, or it could also, just be a big dud and
Emily, thoughts?
Be with caution.
Yeah, I think we might just have to wait until the summer is over to see some real movement. That seems like one of the main factors here is just that it's summer, and that's kind of seems to be affecting just sentiment. But yeah, I mean, my position is the same. I think the long-term narrative on crypto hasn't really changed, so I'm not too bothered by these daily, fluctuations.
All right, well, taking a look, Layer 2 Ethereum scaling project Polygon is taking the crypto world by storm. Billionaire Mark Cuban is an investor, and at its May peak, the price of Matic, the native token of Polygon, climbed about 10,000% year to date, according to Messari data. Joining us now to discuss is Sandeep Nailwal, co-founder and chief operations officer of Polygon. Welcome to the show, Sandeep. So, Polygon is an India-based project, the largest one in the country, launching Polygon Studios is your latest announcement to focus on growing blockchain gaming and NFTs, such as Aavegotchi, Decentraland, Skyweaver, and NFT marketplace OpenSea. Tell us a bit about what you guys are doing, and maybe if you could explain in simple terms, I know you've done it before, what Polygon is.
Yeah. So basically, Polygon is we call it like an Ethereum scaling solution. So basically, our thesis is that Ethereum is going to be the ultimate settlement layer for all this decentralized finance and decentralized business logic execution. And to scale that, we are building some people call it layer 2. There are nuances to it, but for simplicity, consider it layer 2. So, we are building this suite of solutions where you can build multiple such, layer 2 chains on top of it, which enterprises can use, which, games can use, and, decentralized finance can use, and everything. And as of today, most of the decentralized finance space, barring one or two blue chip projects, I think everyone is on Polygon today. And then the net TVL over there is like somewhere around $7 to $10 billion. It has come down because of the market fluctuations. So the thing is that the ecosystem is looking for scale, right? I mean, Ethereum, the gas fees become so high that large number of small time users are priced out. So the community is looking for scale, and Polygon is providing that scale on top of Ethereum.
So just quickly on the blockchain gaming and NFT angle. So I'd be interested to zoom out because it seems like that's kind of one of the hotter blockchain trends of the summer. And I'm curious why you think that is. With gaming, a lot of people talked about how it really blew up during COVID because everyone was like inside. But I'm just curious why you think now we're seeing so much activity in the sort of blockchain gaming space.
So with blockchain gaming, I think gaming has been one of the first, touted as one of the first, breakout use cases of blockchain. But unfortunately, the scale was not available till now, as I was just mentioning about Polygon. So incidentally, Polygon is the, kind of the leading solution in that. And, large number of these games and NFT use cases use Polygon. Then the reason being that now only the ecosystem is reaching that scale, first of all, that it can cater to a large number of users. Secondly, some of these, especially in the gaming, why you see a lot of vibrancy around gaming is that recently few games have finally been able to prove the business model on crypto. Like it is we call it in the industry play to earn model, right? So that model has been proven, and Axie Infinity has been the leader in that. And with them and their overall metrics skyrocketing, every VC wants to find the next Axie Infinity. And similarly with NFTs, like we all know that what kind of crazy prices NFTs have achieved. And this NFT is we all believe that this NFT is basically going to be the gateway to bring masses into blockchain, right? So whether it's through these art NFTs or these celebrity NFTs or these collectibles, memorabilia, or it is about the gaming NFTs. And we strongly believe that this gaming industry, which is so big, like very few people understand that even in US it is bigger than Hollywood, NBA, and NHL and multiple other entertainment industries combined. So this is such a big industry, and with this blockchain, NFT, and play to earn model, and various other models that are coming in, they are going to disrupt the business models within the gaming industry, and hence everybody is very psyched about it.
Hi, Sandeep. The Modi government, of course, not the biggest fans of crypto. Do you think they'll start to come down hard on gaming and NFTs? As there are, particularly those on the blockchain. Do you think that there might be some kind of regulatory action from the Modi government?
The main thing is that Indian government, even though they are very anti to the speculation side of it, but the fact of the matter is that till today, and I am connected to everyone and anyone in the Indian ecosystem space, and there are so many applications coming out over there. I think it's considers one of a kind of the major share in the world. New projects coming out, and till now I have not found even a single project, including us, which has been interfered by the government. They only interfere where there is a retail buying and selling of crypto, and we are not involved with that. And but again, as you said, that nobody can predict the future. So that's why, like, Polygon, for example, has been one of the first projects which has fully kind of decentralized its location. And then we have like multiple, now our larger workforce is in the US, Belgrade, Europe, various parts of Southeast Asia. So the team is fully decentralized, and it's not a Indian, it's an Indian origin project, but now it's a fairly global project. Yeah.
But nonetheless, you're very keyed in on what's going on in India. So what's happening now with the crypto bill that's working its way through the parliament? Is it on hold for now, given the current weather situation? Do you know anything about what is it being tabled?
Yeah.
What's happening?
Yeah, so as per my understanding, that kind of that sensational news that came out that everything is going to be banned and all that anyways was kind of a proposal, and that has been rejected overall by the government. And government is now taking, like, they are involving more and more stakeholders to understand the market. So I mean, the last information I have from my close sources is that the government agencies, special task force teams have been created and have been asked to kind of go through it in a very deeper detail and not rule it out as something small. And I think with this, like Elon Musk purchasing Bitcoin, and many of these US big companies putting Bitcoin on their balance sheet and all that has kind of jolted them up, that thinking that okay, this is not some small scale phenomena, this can be the future of finance in the coming decade or so. So I think they now are much more I think pragmatic, and want to take a very kind of a light touch approach, is what I feel. But of course they will be paying on the retail community buying and selling and speculation parts, but I don't feel that they're going to be against any kind of innovation in the space.
Just quick, sort of more technical question. Some people in the crypto community say that Polygon isn't actually layer 2, but is more of a side chain. I'm just curious how you would address that critique or talking point.
Yeah. I mean, there are few people who still kind of, because the reason for that is that Polygon evolved from Matic Network, right? So previously it was called Matic Network, and Matic Network was creating one kind of layer 2 solution where the two solutions that it offers, the largely more used protocol is not the layer 2, it's a proof of stake. It's not side chain, we call it commit chain. But some of the critics who got a lot of market share moving into Polygon, and some of the competitor projects definitely say that. But the point being that Polygon, as I just mentioned, just said, that Polygon is a multi-chain solution now. So we have this particular commit chain which offers two solutions: Plasma, which is layer 2, and then side proof of stake chain, which can be somewhere between layer 2 and a side chain. That's why it's called commit chain. Then we recently launched our data availability chain, which is going to enable layer 2s to be more scalable. We are eventually going to launch zero knowledge rollups and optimistic rollups, which are quite big, kind of the holy grail in terms of the layer 2 solutions. So these are still the people who still kind of, I'm just brushing aside the competitors and all that, but the people who still feel this is sidechain, they are still considering Polygon and labeling Polygon as the first solution which is live on Polygon. But they are not seeing that Polygon is not a single solution; it's a suite of solutions.
Sandeep, I'm wondering.
Yeah, and it contains multiple sidechain solutions. It contains many layer 2 solutions also. Yeah.
Sandeep, just one last question before we wrap up. But Mark Cuban is one of your investors, and just a few weeks ago, Iron Titanium token, the Titan token, crashed.
Their algorithm and then became live again, and I think they again have $500 million in their TVL, right? So it feels like the Iron Bank scenario was especially not a kind of a scam or rug pull scenario that they say these days, which is very popular in the space, where developers have some sort of wrong logic and all that. And we, Polygon is a decentralized chain, just like Ethereum. Vitalik can't do anything about all the rug pulls or scams that happen on Ethereum. We also can't do anything about it. But the point being, especially for Iron Bank, I think they have come up with some revived algorithm, and then people are still trusting it. I don't know. I have no opinion on that because I've not really delved deep into their model. But it has been the story of this DeFi summer. It has been the story that many of these stable coins come up. It's not the first one. It won't be certainly the last one. Yeah. There's so many stable coins, they come up with these algorithms, and none of those really has worked till now.
Well, it's a project that has begun beware in this DeFi ecosystem. All right, Sandeep, thank you for joining us this morning.
Thank you.
That was Polygon co-founder and chief operations officer Sandeep Nailwal. Coming up, checking in on Asia and a crypto markets update with crypto VC CoinFund. Time now for the daily forecast, an update on what's happening. Here's Angie Lau of Forecast News.
Welcome to the Daily Forecast, July 21st, 2021. I'm Angie Lau, Editor-in-Chief of Forecast News, covering all things blockchain. Coming up, FTX closes a $900 million fundraising round, the largest in crypto exchange history. China Mobile patents a hot wallet currency management system, and decentralized home-sharing platform dTravel hits 200,000 listings. Let's get you up to speed from Asia to the world. Hong Kong-based FTX has closed the biggest fundraising round in crypto exchange history. The $900 million Series B fundraise values the company at $18 billion. Now compare that to NASDAQ-listed Coinbase, the largest crypto exchange in the U.S., whose current estimated value at today's stock price is $46.9 billion. For investors, FTX represents a lot of room for growth. Big names in the private equity and crypto industry space participated in the round, including Sequoia Capital, Third Point, SoftBank, and Coinbase Ventures. The cash raised is expected to expand product offerings, user base, and partnerships. Now, one expert told us that FTX's exponential growth has allowed for the development of innovative trading products at breakneck speeds.
The rise of our blockchain-enabled financial markets infrastructure is leading to an explosion of innovation. It's introducing new products that are easily accessible, and they're empowering the next generation of traders.
Since its launch in May 2019, FTX has grown to over 1 million users, and it has a daily average trading volume of over $10 billion. That's more than double what Coinbase does. It reported an estimated $335 billion in trading over the first 3 months of the year, or a little under $4 billion a day over at Coinbase. Now, FTX revenues have increased more than tenfold this year and 75x since its Series A funding round in 2020. Can't wait to see what shopping spree FTX is about to go on. Meanwhile, China's largest telecommunications company has been granted a patent on a virtual currency management system. China Mobile's newly patented system claims to prevent the theft of hot wallet keys, and it does that by allowing the hot wallet to interact indirectly with the public data net via a wallet server. That could keep virtual currencies safer. The announcement was made on the same day that the communications giant was named as a member of the ECNY Research and Development Team at a press conference held by the People's Bank of China, the PBOC, following the publication of its white paper on the digital currency. Though China is a wholly state-owned entity, falling under the supervision of the Ministry of Industry and Information Technology of the State Council. And in a country of 1.4 billion people, China Mobile has 950 million customers. Talk about market saturation. All right, onto the markets right now. Bitcoin up almost 3.5% at just under $31,000. That's as of 4 p.m. today at the end of the mixed trading day in Asia and the last trading day of the week for Japan for national holiday ahead of the Olympic Games. And in the top 10 for cryptocurrencies, Polkadot up almost 8%, Dogecoin up just over 7.5%. dTravel, the decentralized home-sharing platform, has seen quite a homecoming. The platform, which has a team spread out across Australia, Vietnam, and the United States, had hoped to list around 1 million properties within its first 12 months. But since last month's launch, more than 200,000 properties have been listed in more than 2,000 cities around the world. By comparison, Airbnb took 2.5 years to see 50,000 properties listed. Now, dTravel's co-founder says the next step is to decentralize control.
We plan to have a lot of authority moved from the founding core team to the community's governance authority in the first half year to a year.
In a lockdown pandemic with people desperate to see their loved ones, the travel industry is poised to pick up again. Home sweet home once again, hopefully, in a post-COVID world. And that's the daily forecast from our vantage point right here in Asia. For more, visit forecast.news. I'm Angie Lau, Editor-in-Chief. Until the next time.
The Crypto Markets Update is presented by Grayscale, the world's largest digital currency asset manager.
a lot of green in the crypto markets right now. Bitcoin, the CoinDesk Bitcoin Price XBX Index, currently at 31,500 and about $30 right now, up about 6% over the past 24 hours. And the CoinDesk Ether Price ETX Index trading at 1902. ETH is slightly higher, about 8% in the crypto markets right now. And the new DFX CoinDesk's DeFi Index is trading at 425. DeFi is soaring over 10%. Crypto VC firm CoinFund is targeting early mainstream adoption with an $83 million venture fund. The 6-year-old firm has headlined 7 fundraising rounds so far this year. Joining us now to discuss the crypto markets is Jake Brukhman, managing partner at CoinFund. Welcome to the show, Jake. So first off, I would love to get your insights onto what's going on in the crypto markets. We're seeing a bit of a bounce in Bitcoin right now after falling below 30,000, as well as a bounce in the rest of the crypto markets.
Thanks, Christina. Good to be here. Hi, everyone. It's really lovely to be joining you on a green day, such as today. It looks like it is one of these short-term fluctuations, but I do focus most of my time on the early stage venture side. So, you guys should chat with Seth Gins, our head of liquid investments at CoinFund, about day-to-day market color.
Fair enough. All right, so 7 fundraising rounds. What are you investing in, and what kind of opportunities are out there that you see as key?
Absolutely, Christina. I think what we have in the last 2 funding rounds over the years. We started in 2015. Our first fund was really focused around the world beyond Bitcoin. Our second fund, which we launched in 2018 in partnership with the partners at Venrock, was looking at the world beyond ICOs and can we build fundamental value in protocols and blockchain more broadly. What we're seeing now is a lot of the foundation for technology has been quite a bit more built out. We see a lot more entrepreneurs taking technology to market, to consumers. We've seen NFTs kind of hit an inflection point in February. And this fund is really focused on that idea, early mainstream adoption, taking blockchain mainstream, think kind of infrastructure projects and base layers and scalability tech, but seeing a lot more traditional entrepreneurs come into the space and build blockchain products.
So, Jake, who's putting money in your fund? What kind of people and what kind of institutions are investing with you?
Yeah, I would say, over the years, the crypto fund space has been headed toward professionalization. And as such, it's really a process where institutional investors are starting to take a greater and greater interest, in the industry. I think that's great. I think it legitimizes the industry. And what they're saying is, look, we think this is kind of the next internet, water, but we really have a long-term here, and we're just starting to deploy capital.
Looking at some of these larger, longer-term crypto trends, I'm curious about 2 things. One is meme coins. Do you think sort of the meme coin era is coming to an end? Because we've definitely seen less activity in that area. And the other is NFTs. We've seen kind of less activity in the NFT area in the US. And I'm just curious, like as an investor, what do you think about those 2 phenomena?
Yeah, speak to NFTs as we're pretty early investors at CoinFund in the NFT space, like we did the 2018 DAP round, and we're pre-seed investors in Rarible.com. And a lot of the reporting focuses on the assets and the prices, of course, which just like any other asset class, NFTs are going to have fluctuations. But what we really saw in February after the inflection point, after NFTs were on Saturday Night Live, is that this kicked off, in my opinion, a large number of exploratory processes from corporates, from enterprises, from companies that have goods, from influencers and brand owners and artists. And what I think that amounts to is that over time, we'll start to see more and more kind of mainstream-facing products in the NFT space. It'll just take a little bit of a business cycle. As for meme coins, I don't think memes are going away from the internet anytime soon. And cryptocurrency as a way of monetizing memes, I think, is a really important way that we learn about what assets are.
All right, Jake, you're breaking up a bit, but thank you for joining us this morning and sharing a bit about your investment strategy.
Thank you. I appreciate it. Thanks for having me.
That was CoinFund Managing Partner Jake Brukhman. Coming up, why a co-founder of Ethereum is quitting the crypto industry and why crypto lending platform BlockFi is getting a cease and desist letter from New Jersey with CoinDesk Global Policy and Regulation Managing Editor Nick Day. Welcome back. Time to check in with CoinDesk's global policy and regulation expert, Nick Day, who is also the editor of CoinDesk's The State of Crypto newsletter. Welcome, Nick. So, crypto lending platform BlockFi is receiving a cease and desist order from the New Jersey Attorney General. What's going on?
Yeah, so late Monday, Forbes broke the news that the New Jersey Attorney General's office, and specifically the new acting Attorney General, who just took office, I think on Sunday, possibly, or within the last couple of days, certainly, was filing a cease and desist to prevent BlockFi from allowing new New Jersey customers to sign up for its BlockFi interest accounts service, which is basically lets customers invest a certain amount of crypto, and they can get the interest paid out. New Jersey Attorney General's office, in an order that was published yesterday, said that it's because, in its view, the BlockFi interest accounts themselves are securities based on, among other things, the fact that BlockFi will invest funds into a couple different things without really providing a disclosure or a breakdown of what exactly that money is headed towards.
So, Nick, speaking of disclosures, USDC, they put out their disclosure of what's on their asset side. Not everybody's happy with it. What's going on there?
Yeah, so Circle published a breakdown of what's backing its reserves, or at least a rough breakdown, saying that, the 61% is in cash and money market funds, which it's treating as a cash equivalent, but it also has, I think 9% in commercial paper and a little bit in commercial bonds, municipal bonds, things like that. So this is the second major stablecoin issuer to do so. Tether, of course, was the first one. But, I think arguably USDC provided a little bit more information because we have a specific, S&P rating on paper for each of the investments it's made. The other interesting part is that, Circle has only 9% in commercial paper and Tether had, I think, closer to 50%. So there's definitely a massive difference in, what exactly the breakdown is. Now, the other question is the fact that Circle has investments in, what are arguably, some of these things could be called securities. Does that mean Circle is basically fractionally reserved, or that, it should be, taking a closer look at, what exactly it fits in under the regulatory regime? And those are some of the criticisms that you alluded to earlier.
Mm-hmm. All right, Nick, thanks for the update. All right, that was CoinDesk Managing Editor of Global Policy and Regulation, Nick Day. Don't forget to sign up for the State of Crypto newsletter at CoinDesk.com.
The CoinDesk Spotlight is brought to you by Nexo, the place to earn on Bitcoin, Ethereum, and more.
Our next guest is one of the co-founders of Ethereum, the second largest cryptocurrency by market cap. But now he's seeking to exit the crypto world. Let's find out why. Joining us now from Toronto, Canada, is Anthony Iorio, CEO of blockchain startup Decentral and Crypto Wallet Jacks. Welcome to the show, Anthony. So,
Christine, sorry, I heard the producer, but I don't hear you, and I was hearing the whole last interview, so I'm not sure why your sound has disappeared.
Can you hear me now? Testing. 1, 2, 3. Oh no.
No, I hear you though. So there's not something on my end is an issue here.
Okay, let's try to get that resolved for you.
There we go.
Okay, there we go.
I can hear you now, Christine.
Excellent.
Yeah, you're coming in.
All right, so
turn on my speakers a little bit because it's a little light still.
No worries. Okay, so Anthony, this has caught a lot of attention because many people know you for Ethereum. Forbes says ETH has made you a billionaire. Maybe you can set the record straight on that. But also, Bloomberg out with this headline that we have here saying that safety concerns has you quitting crypto. How accurate is that?
Okay, so the first one, never been a billionaire. There was a Forbes report out a few years ago, and I specifically did not mention what my holdings were, and I think they kind of made some estimations. And of course, through media, things will trickle to other things, and then it gets labeled in headlines, and that's how that happens, and it's very difficult to control. But no, never been a billionaire. A lot of what I do is build and keep building, and through the years, I've just been putting my efforts into my company, building infrastructure, building the tools needed for the decentralized world. So yeah, I can clear that up right there. The first time probably there that's not a billionaire. And then the second question about quitting crypto, again, a headline catches attention. I'm planning to sell my business. I'm planning to sell Decentral, the makers of Jaxx Liberty, and that's been something that's been on my mind for the last couple of years. We've been spending 10 years building infrastructure, building tools to empower people to be in control of their lives. The same thing's needed for the internet was needed for the decentralized internet. So started building wallets back in 2012, started building cloud services or blockchain as a service along the way the last 10 years, and really have a full package that we could offer down the road to somebody that's interested in taking it further. As my what I want to be doing is kind of shifting away from the space, but crypto is always going to be something I'm going to be holding still. I'm still really involved in some projects. Most notably, I'm going to take a bigger role in a project called Shift, and just going to focus more on what I'm good at, which is problem solving and dealing with larger world problems. And blockchain will be a percentage of that, I'm sure, but a lot of times it's not the solution to everything. And there's a lot of problems out there that need to be worked on. And what I am good at is formulas and mechanisms to solve problems. And that's really what I take my attention is serving the world and taking those that major thing that I'm good at to the rest of the world with formulas and papers I've got coming out on solving big problems.
Good morning. Nice to have you back. But just on the safety concerns problem, like, where did that come from? I mean, is that kind of a factor? And also, you are already known as one of the founders of Ethereum, and you're a major figure in the crypto space. So, anything you did now, it seems like that ship may have already sailed, right? Like you already are kind of a major figure in crypto. So I'm just curious.
Sure, it might look like that. All my life, I've been looking for freedom. I never liked school. I never liked being told what to do. And my search for freedom led me into the blockchain space, the crypto space, the ability to be my own bank, being personal responsible for things such as my digital assets. And there's always a trade-off and a double-edged sword to that. So the more freedom I was seeking, I realized in 2018, the less free I was actually felt I was becoming. Having security details and having to think about my security and family security and things like that is really something that until you get to a certain point in this space and you go, wait a second, I'm my own bank. Maybe there's a good reason to have stuff in a bank where it can be protected, and there could be other areas of risk that emerge once you get to a certain level. So 2018 was really a groundbreaking time for me where I realized that the more freedom I was actually looking for was actually leading to less freedom. And that was a major change. And I started thinking about, is this really what I want to be doing? And do I want situations where there could be some type of life-changing event, either by building products that are helping people manage their digital assets and something happens there and there's a risk of something happen to our customer fund. Very luckily in our products, we've never had an issue like that, but something could happen. And do I really want that in my point in my life for my family? Is that type of risk? So I really started thinking what is I really want to do and what I'm good at, and really came to the idea that I want to be of service to the world, and I want to do it because I like to serve and it makes me happy, and I do it with my problem-solving mechanisms. So if I can create a shift into doing things that are not necessarily revolving fully around the crypto space, I believe it's actually going to be a much better safety mechanism for me. And if I'm focusing on larger world problems that are not thinking about me as a crypto person, me as doing things that are helping people manage their cryptocurrencies, I believe that I will be much safer for that. And
on the safety issue, though, you bring up a lot of interesting points. I mean, do you think that this safety concern is more prominent in the crypto industry than, say, just traditional finance? Like, do you think sort of people who are prominent in crypto have to worry more about this than, say, people who are just, prominent in traditional finance?
For sure. The whole mechanism between services such as banks are there to be intermediaries between individuals and a product and what the service they need. And banks were started in order to help people manage their money or have a safe place to store their money. And with the removal of that and empowering individuals to be in control of their digital lives, their money, their communication, their identity, all those things that I've been building tools for over the years, because I do believe that is something that the individual should be responsible for or have full control over without the third parties. So there's actually some other benefits to have third parties involved that can help with such things and help manage things. And it's not a black or white thing. And I'm a very big proponent of things in the middle, and it's not, maybe 55%. I'm happy that I'm holding my money, but maybe there's another point that says I feel safer if my money was in a bank, or I feel safer with people knowing that my money is protected in a certain fashion that is not me being fully responsible for it. And that's why we have different ways of wallets. We got custodial solutions, we got there's a wide range of things out there that give people different options. But when they take personal responsibility and when they become known, and the more attention that I get in press and things, the more I have to actually adjust my risk and have to make sure that I'm doing things that are going to further protect me, protect my family. So I am looking to sell the business. I am not a billionaire. I have cryptocurrencies. They're very safely stored. But a lot of people don't understand how things work. And it's just, I think, as more and more people realize that people are personally responsible in these new types of systems, that there is other areas that they need to be considerate of. And for years, I've been speaking with colleagues about the safety and security that are going to be needed for certain people in the crypto space, and how important that is, and how important it is for people to realize that with this responsibility also becomes a lot of work. The responsibility of owning your own stuff does come with other responsibilities to be considered.
See, Anthony, if you were a billionaire, you'd be able to leave the planet for your safety. So I guess that proves your point. But
let me also, I'm going to say one more caveat too. I'm sorry to interrupt, but else, everything's been going into my company, and I don't know the value of my company. I don't take investor money, so I've never raised money for the company. So what I've been putting into the company could make me a billionaire as an overall, but I just don't know what that number is right now. So that's just a caveat with the billionaire thing.
So along the lines of where you were saying what you want to do with Jackson, selling it, and issues about safety and other concerns, what do you make of Eric Voorhees and Shapeshift going decentralized? Do you think that's the solution? That's a possible solution for you?
Yeah,
I mean, that's the right thing to do.
Well, I mean, different circumstances and situations could make something right or wrong. So Eric, I'm sure, is gone down a path he's been thought about for a while and might be very appropriate for his company. And he's testing something to go into a DAO that is actually really interesting, and I want to see what comes out of it. For me, I don't think that would be the right approach or time. There's a lot of other considerations, employment agreements, contracts and stuff, but I just can't wrap my head around on how that's going to be handled in the future with a company that's shifting, especially one I think is set up in the US, or at least operates some in the US, how that's going to be handled. And I'd love to see how he's going to do that. But for me, no, that's not something that I'm proposing. My goal is to find an organization that wants to be able to take what I've built over the years, and again, that's the interfaces, the services, the partnerships. It's basically a whole package of tools that can help lift the company into the decentralized space, with me potentially as a vision piece of it or as an ambassador for the company. Scale it, grow it to how they want to do it, do the other options that I want, hardware services and things that we're going to be contemplating putting in, enterprise services we've been building for cloud services for decentralized tech that connects to all the different technologies, and let them go with it, with me on the side where I can go finish that on my problem solving stuff and getting my formulas out to the world and really doing much more meaningful things, because a percentage of the world problems can be solved with blockchain, but there's a lot that can't. And I don't think specifically focusing just on that solution is something that I want to do. And I think it's only a small tool in my arsenal.
So speaking of those problems, what are your thoughts on ESG investing in, and the likes of Hut 8, your fellow Canadians who are using natural gas in Alberta to mine crypto? Do you have any thoughts on that?
No, not really. It's just not the area. Again, and we talked about this last time when you were asking me questions about specifics with Ethereum. It's just not something that I'm following in the news too much. I'm trying to focus on what it is I'm doing, and I just find that there's a lot of frustration. Something that comes out with stuff that I'm reading in the news, and that's fine. Yeah. But I try to focus on what I'm doing. So I haven't even been involved or heard the news on what Hut 8 is doing.
Well, Anthony, I'm curious what your plans are next. You mentioned a project called Shift. I understand you're working on a zero emissions car. You're consulting Paraguay on their latest Bitcoin legislation.
Yeah, well, I can start with the Paraguay thing. It's not necessarily the Bitcoin legislation. It's working there with Carlos Regales on the problems the country has as a whole. And we've got things like massive amount of corruption, like similar in other areas. And it's identifying the stakeholders. It's identifying elements of a solution. I have a full framework that I'm going to be releasing called Perfect Formula, which is basically my models to solve problems. It's a general problem-solving formula. So the Bitcoin aspect of it is something that he's come about that they're instituting and trying to put in place, but I'm trying to figure out how we dig into more things about election fraud, how we're digging into and understanding the way that the politicians work there, how it's tied to the media, and how the media has such great control of things over there. So that's an example of something that's beyond Bitcoin, that's much more holistic, that I want to really dig into and figure out how to create winning solutions for all stakeholders. And I think the key with all things is to figure out who the stakeholders are, add more stakeholders to the mix, and then provide win-win-wins across the boards by thinking a little bit differently and thinking and using principles, tools, and processes I've developed to create situations where everybody's on board with a solution. I'm talking about competitors. I'm talking about people you wouldn't even think in the mix there, to create as close to 100% of a situation that everybody's being served. And I think that's how movements are created. And the goal for me is to create massive movements around doing good and being of service and creating positive impact, bringing people together, getting rid of this tribalism and this divisiveness that is so rampant, figuring out new ways to do business models that are obviously ways of doing them are deficient now in terms of collecting user information, which is something we've never done, and created new ways of doing that. Advertising models, which leads to a ton of different issues as well.
Anthony, we've got to wrap it there, but thank you so much for joining us. You'll always be a crypto guy to us, but nevertheless, looking forward to seeing how you evolve and tackle bigger problems in other industries.
Thank you so much.
That was Anthony Iorio, co-founder of Ethereum. That's it for First Mover. Thank you, Emily Parker and Lawrence Lewitinn, for joining me. I'm your host, Christine Lee. I'll be back live at 3 p.m. with All About Bitcoin. Coming up at noon is The Hash. You're watching CoinDesk TV.